Hi, it's Larry Gaines from Powercycle Trading, home to options on the open. We've just transitioned over to our new website, Powercycle Trading, and everything else is the same. We still have a virtual trading room, options on the open, but our business has grown so much, and we incorporate and use so many other tools, futures, options, ETFs, that we're not just solely about options anymore. So this is the new look, and I just wanted to update everybody on that. And then today I'm going to go over a really great investment trading play that I think everybody should be aware of and looking at, and this is the gold market. So I'm going to go through a little bit of fundamental analysis and then a lot of technical analysis and show you some really great tools to use as far as looking at gold and even other commodities. So let's get started. To start off with, though, if you've not received my free ebook, please go to the website powercycletrading.com right here, and then you'll see on the home page top 15 trading strategies for options. Just put in your name, email address, and it'll get to you right away. In this video, I just wanted to go over kind of the global overview of the markets and why gold is on such a tear and what's going to happen in the future potentially for gold. So first off, though, you should know just kind of some of the fundamental basics about gold and what pushes it up or down. Currently, with the global central bankers all printing money, this to create market liquidity and in effect to stimulate economies, this type of intervention actually debases and lowers the value of currencies. And what eventually happens is that it's a benefit to the government because it lowers the value of the currency, which helps them pay off debts and things like that. But it's a detriment to the ordinary citizen because it creates inflation. And by devaluing your currency, your paper money, the fiat currency that we all use, since it's not supported by anything other than just paper, this devaluation and lowering of the value of a currency increases the price of all the commodities that we use each and every day. Milk, bread, meat, oil, things like that. So to hedge yourself, the really only way to hedge yourself is to buy those physical commodities. And one of the easiest ways to do that, since we all are not open to futures accounts and things like that, is just to buy gold. So with that in mind, we've seen gold really take off. But like in any business, if you want to have a business and if you want to be an investor or a trader and you want to make good decisions, you need the right tools, just like you would running your business. So what I'm going to show you today is just the way that we are able to look at trades and even investments using our Powercycle trading model. So starting off, we look at a macro trend and then go down. So I call this top-down analysis. So first we'll look at the long-term trend for gold and see where it's headed, and then we can go from there. So basically, I'll start out with either a monthly or a weekly time frame. Here's your weekly chart of gold. This is a continuation chart of the gold futures. Using our model, we had a cycle low trade, we called that, and that came on July 13th. So our model went long right here on a long-term basis, and it's still holding long. So you can see the huge move and acceleration to the upside. So that's on the gold futures continuation chart. Now, if you're not able to trade gold, the easiest way is with the ETF, the GLD, and I'll show you that. Now here's the GLD. This is also using a weekly time frame with our trading model, and this is where the model again would have gotten in or did get in if you'd taken the entry, and that's on a long-term basis. That came on July 13th. So from that point on, we've had this big trend up. The next time frame we will look at will be the medium-term time frame using a daily chart. So here the cycle model, the last long setup, still currently long, was on the 20th of August, right here, where that arrow is. Now since then, a couple of interesting factors to point out is that, number one, this is a golden cross. So this is when your 50-day simple moving average crosses the 200. This is a very bullish pattern. with moving averages. And when that does happen, that signals, we've already had this big move, but that signals a significant change to a very strong market. But we've had a huge move up, but this is just confirmation of that move. A couple other points to point out is that when you do get these big moves, you're looking to re-enter and buy pullbacks. So one thing that you'll look for is consolidation, and then like here, and then a break of a trend line or bull flag formation. So here's a bull flag, here's another bull flag there. And then the other thing you want to look at are some moving averages to see how the trend is moving. So one good moving average is the 8-period exponential, and then your other simple moving averages. So a couple things to point out there. Now, where's the market headed? This is what we'll do for that. One simple method is just to use your Fibonacci retracement levels. So we've had a huge move up, and this is the GLD daily chart. And so what you want to do is go back and look at the prior high, all-time high, or high from recent future, and that came back on back to September a year ago. So since then we've had a huge move down, and we basically based out right down here about 148.25. So from high to low, put your Fibonacci levels in. You can see that we just broke this past week substantially back over and closed over the 618 retracement at 171.30.40, that area. And now we're up to a next resistance point right here, which is this yellow line, which comes in at a high of 174. So the market's pushing to 174. It's going to probably, first time up, they never usually goes through, so could expect a pullback here, which could give you an opportunity to get into this particular asset class if you're interested. So that's one thing to look for. The next thing we'll do at Power Cycle Trading is use our trading model, and we'll look to get in based on a swing trade setup. So for swing trades, we'll usually use a shorter time frame of the daily, the 60-minute, something like that, with our model overlaid on it. So you can see here the last two really nice entries that we had based on the model came on the 18th of September. So we had a cycle low trade set up on a swing trade for GLD or gold futures, and then again on the 20th. So you can see here these are cycle trades, these are swing trades. This lasted from the 18th and peaked out on about the 19th. So this was basically 1.5 days and another 1.5 days. So based on this, we'll use this model to get in, and then the next thing we'll do is, okay, how do we want to play? A lot of times some of the members will just buy outright futures, or sometimes we might buy options or weekly options. So I'll show you the last play on that. So earlier in the week I told our members the first of the week to keep an eye on gold if you're interested in trading. There's this potential for a bull flag here, and this usually kind of pattern signals in an uptrend a break to the upside. So we were looking at that earlier in the week. You can see here it's starting to develop, and I pointed out, okay, keep an eye on it because we could get a break to the upside on a bull flag breakout. And then on Thursday, the right here, Thursday, this red bars down here, we had the next day, a weekly option expiration or expiration day on options. So the next thing we did, we looked at options to see how potentially we could take advantage of a breakout, and I'll show you what happened. So I like to teach our members, we look at the option chains. So here's the option chain of GLD. Here's the 172 strike here. You can see the open interest is highest at the 172. With the pattern formation or system being long, there's a high probability that we could see an upside potential and a break to the upside. So we were going to look at the 172 calls. The weeklies, they're the ones that are expiring Friday. They're very cheap, and this is what happened. So at the close Thursday, for the close, these 172 strikes were about $29 a contract. The next day, this is where they open. Next day, the GLD opened up at $1.50 higher, and these options were over $100 a contract. The day prior, we had members buying those for $30 a contract. They made well over 200% on that trade. So if you'd like to follow us at Power Cycle Trading, home to options on the open, and learn how we do this analysis, and for all the other future contracts, stocks, ETFs, come join us, powercycletrading.com, powercycletrading.com, and thank you very much for your time.